Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. I was reading through an article. Looks like Michael Burry and Cathie Wood are going at it against each other. And here's an article. It's behind me. Let me shrink me up a little bit. It says Cathie Wood says Michael Burry doesn't understand innovation space after he bets against ARK Fund. She says, I do not believe that he understands the fundamentals that are creating explosive growth and investment opportunities in the innovation space. Burry Scion Asset Management bought 2,355 put contracts, so he's shorting it, against the red hot tech ETF during the second quarter and held them through the end of the period. So Michael Burry, and I'm not pro either one, it doesn't really matter to me. But what he's looking at is the same thing that I look at, and his viewpoint is the same exact as my viewpoint. He thinks that there's going to be inflation. In fact, I think he thinks there's going to be massive inflation, which it could be. I'm not in that camp. I just think there's going to be inflation. I'm not predicting how much. I do think it's going to be a lot. And then interest rates chase inflation. So he thinks that interest rates are going to go up. So Cathie Wood is basically her viewpoint is that inflation's not going to come, and I don't see a chance in that. I don't see the chance of that not happening. I don't know how I don't know how she could be right. There's going to have to be something in the system to block this inflation. But from what I gather and where we are in the real estate cycle, inflation is going to come, and interest rates are going to go higher. I don't think the Federal Reserve has the ability to hold them down without sacrificing the dollar massively. I don't think it's possible. And I think the market is going to force it. I don't know when, but it's going to force it. And that's what Michael Burry also thinks. He thinks that inflation is going to come and they're going to get into a point where they're going to have to raise rates. And if they raise rates, the companies that she's in are going to get slaughtered. They're going to get slaughtered. Now, here's the thing. I don't know the timing on this, and I think Michael Burry thinks it's going to happen very, very soon. And it very well could. I think there's some legitness to it happening very soon, and where everything's kind of positioned. But to take the viewpoint that Michael Burry has is basically you're saying that interest rates are going to go up, and bonds and high-tech companies are going to get slaughtered. And that money's going to rotate into commodities and precious metals, and that's where he's hanging out. He's also shorting bonds. So basically, he's got the same viewpoint as I do, almost to the T. Come on down here. Wood made a name for herself, banner 2020 year. She returned nearly 150%. The fund had big holdings in shares like Zoom and Teladoc, which thrived during the pandemic. The ETF ballooned with investors hoping to get a piece of the disruptive innovation names. Coming on down, however, some of Wood's top holdings are controversial due to their lofty valuations, with many making little or no profits. And remember, I've had some things talking about PE ratios expand when interest rates go down, and they contract when interest rates go up. Burry knows this. Anyone who's been in the market should know this. And if inflation comes and interest rates go up, that fund is going to get slaughtered. I mean slaughtered, because it's a growth fund that has blown up based off of interest rates being pushed and driven down. Burry's filing in the end of last quarter shows he increased his Tesla put position, so he's shorting Tesla. Wood is a longtime Tesla bull. The electric car maker is the number one holding in ARK Innovation, accounting for more than 10% of the entire ETF. In our view, this is Wood. The seeds for innovation explosion that ARK Invest is dedicated to researching were planted during the 20 years ending with the tech and telecom bust. Having just stated for more than 20 years, these technologies should transform the world during the next 10 years. That's what she thinks. But remember, valuations have nothing to do with the underlying movements of the companies. It has everything to do with interest rates. Interest rates price everything. Interest rates going up are going to slaughter the PE ratios of these companies, which have ballooned massively. They're in bubble land like no other. And for her to take the standpoint to not recognize that is pretty bad. I mean, you should say, look, these things are massively overvalued. And if interest rates were to go up, they're going to get priced far lower. It depends how high interest rates go. If we are correct, GDP and revenue growth will diminish until the opportunities in nascent technologies begin to move macro needles. In this environment, innovation-based strategies should distinguish themselves. Now, she says the deflation in commodity prices is cyclical, but is adding to the secular forces caused by technologically enabled disruptive innovation, good deflation, and creative destruction, bad deflation. Now, I disagree. So the two big differences between her viewpoint, Burry's viewpoint, and my viewpoint is she thinks that deflation is going to happen in commodity prices. I don't think that. I think it's going to be massive inflation. The inflation-deflation is from a monetarist standpoint. So we're going to have inflation if we're in an expansion phase of real estate. That's like, period. It's happened in history. That's what happens. Now, if we have inflation, that money has to go somewhere. That money's going to go into the system and people are going to figure out where to put it. Not many people don't have complete control over it. Now, if interest rates are going up, it's not going to go into tech and it's not going to go into bonds. Money's going to be coming out of those sectors. Where else are you going to have in a high inflationary environment? Where's that money going to go? People are going to choose, in my opinion, commodities and precious metals. You're going to get a massive flow of money into these. It's going to be massive. Absolutely massive, because there's going to be nowhere else to go. Now, if you have both of these very large sectors selling off, and all of that money is going to be funneling into one little area, this is going to be pretty big, in my opinion. So she thinks the deflation in commodity prices is cyclical. I already read that. Since mid-May, the number of commodity prices have been breaking down. Lumber down 65-70%, copper down 10-15%, oil down 10%. An unexpected increase in the dollar also has a negative for commodity prices. Now the used car index slipping. Well, you can't. Here's the thing that you cannot do that she's doing. She's using very short-term prices. These things took a massive move off their bottom, and then they have a little bit of a correction. That is normal. And then we're going to see them take off again. Now, what are her companies going to do, and how profitable are her unprofitable companies going to be when all their input costs go up 100%? 100%. I don't think a lot of her companies are going to do that well. Now, there are some companies that I'm looking at, and the only thing that she has right is that technology and their S-curves are compressed. They're compressed and they can go very quick. The problem is the companies that she likes are subject to input costs ruining their bottom line, massively ruining it. They're high mineral intensity companies, some of the companies that she likes. Not all of them, but some of them, like Tesla. Now, if their input costs go up 100%, they're not going to sell much. They're going to be in a world of hurt. And I just don't think I'm in the Burry camp. That's where I'm at right now. It says most bears seem to believe that inflation will continue to accelerate, shortening investment time horizons and destroying valuations. I agree there. Despite what we believe has been a supply chain related short-term burst in inflation, both equities and bonds have appreciated since March. I completely disagree with her. Yes, some things are supply chain related. Other things, you can't have everything go up all at the same time unless it wasn't inflation from a monetary standpoint. We did have this inflationary push, and the percentages perhaps could be transitory, which means that we get a huge spike in inflation. And then I think it'll come back down a little bit, but it won't come all the way back down. It'll come back down a little bit, but remain very elevated. That's where they're going to have pressure on the dollar at some point. People aren't believing it yet, in my opinion. They don't believe that they believe her viewpoint. A lot of people. I believe Burry's, but I don't know if I'd go to the complete, hyperinflation aspect of it. But I think we'll have good inflation. So that's where we're at with this article. I wanted to go over both of those viewpoints, and I think the viewpoints are, a lot of people hold either one of those viewpoints in the market. A lot hold Cathie Wood's, and a lot hold Michael Burry's. I'm in the Michael Burry camp. That's kind of what this thesis of the channel's around. And the reason I'm in that camp is because the data supports it. I'm not in the deflation camp, and I don't understand how you could be necessarily in a long, deflation for a while. If technology is deflationary, then where is the deflation? How come I've never experienced this type of deflation that she claims to have? Are we saying that new technology that doesn't exist yet is going to cause this deflation? Now, there is some deflation in some products, but I have not seen deflation in the things that are required for me to live. Food, housing, property taxes, all this health insurance, all the stuff that I spend my money on, all of those things have gone up. I have not seen deflation in any of the areas that I would like to see deflation in. My must-haves in life. I consider health insurance to be a must-have. Car insurance has gone up. If I'm going to buy cars go up. I buy food. I buy, there's health things that families need. All of those things have massively gone up. I don't buy an infinite amount of, big TVs or computers. I buy that once every couple years, and that's about it. I don't even buy that much. So the things that I use, it's been massive inflation, and apparently the things that she uses has been massive deflation. But that's the two camps. I'm in the Burry camp, not in the Cathie Wood's camp. And if interest rates go up, I do think that her ARK fund is going to get absolutely slaughtered. That's my opinion. If you guys like this content, give me a thumbs up. Thanks for listening. This is Finding Value.